If you're running a business and you understand scaling, this will interest you. One of my students still within the first year made $1,369 in 4 weeks, trading just 2 hours a day, 2 to 3 times a week. The crazy part, this approach is 10 to 30x scalable without adding more hours. And I'm going to show in this video how he did it so you can do it too. So first of all, please use ours a demo account, and you can see here the trader had 21 trades, 12 winning trades, 9 losses, and the 9 losses was only like $277, but the 12 winnings were like $1,647. So the trader could have like 20, 30 more losing trades and still make money. This is something what is very important. And there's a 3-step method with this by learning how to use also proper money management. Here on the right side, by the way, you can see how the student is losing $30, maximum $40, like around 30, but makes here when it says he traded up to $200 in average. So step number 1 is we take the chart. This is the S&P 500 futures. Why we use futures? Because we can have a lot of leverage. That means with a $3,000 account or $10,000 account, for example, we can scale over $1 million. That means as if we would have $1 million in the exchange, we could lose or make $1,000 or $3,000 within just 1 or 2 hours. But that means also what is really awesome when trading futures is that we can have a stop loss and an entry and say that we exactly only want to lose $100 in that direction, down or up. But if it goes in our direction, then we can make $400, $500 or $700. And this is something what I'm showing here with the 3-step method. The first one is to take always a picture. I want to make this so simple as possible because the student is talking to me multiple times a month, like and is getting exercises. And the thing is just like when you have here the first picture, you take a picture in the beginning, you draw in a square in front where you don't know what's going on, and you make sure that the square is on the timeline on the bottom 1 or 2 hours, depends on how long you're available, between 9 a.m. to 4 p.m. Central Time. Very important thing. Then you compare a bit the last 2 hours, and if you have a 1-minute chart, those are maximum 120 candles. You need to look at what did the market do for movement down and what did the market did for moves up, for example, right? So you can see the market did this move down and this move up, and the student assumed that the market does around the same move down here, or even beyond it. And I think that wasn't that good. I think like because the student was seeing here, okay, market does this retracement, goes to this high here, as you see here, has struggles, makes a lot of sense that the market does around the same retracement back. So that means we're here in a consolidation phase. This is where a lot of losing trades can happen. If we want to sell, and this is something that's very important based on our game plan, our trading plan, is that if we trade, then we trade only from here to here, and under this red line, we expect problems. That's something what just very important. So we take a picture in the beginning, 1 or 2 hours, we compare the last 1 or 2 hours, then we use a drawing tool and we draw inside what do we see where the market is going at. It's very important not to read the candles first because that comes after, because from here to here that could be like a $3,000 or $10,000 move. And then it's all about, did the market do a $3,000 or $10,000 move before I would lose money? And you can see here the market was doing exactly or around here, this length here down, just this length here down again, and then the market was shooting up higher, right? So it's more about like getting more experience with that first. Because the student is with me in mentorship, that means like in a coaching program, she's learning first how to see $2,000, $3,000 moves is very important. And then it's very important, how can I adjust $100 to make $500? And this is the third picture. And we're first doing this after the market was doing all those stuff. You can see here what the trader was trading live while the market was running. But if you're a beginner and you have not more than like 3 years of trading experience, this will be the best approach, that within the next 3 to like 4 months that you can already trade very, very good and have also experience, because you first need to see what moves the market is doing. So the setup is pretty simple. It's just a green and a red candle and a red and a green candle. And you can see here a green candle, and then you can see here the red candle. And the trader was entering the trade because you can see here multiple green, red is a high, multiple lower highs. Then the trader was entering here the trade, and you see here how many red candles we have here, really awesome. And then the trader entered the trade here using the color switch and then got stopped out. This is now what is very important. A lot of people, they lose here now a lot of money, but we just lose here in, like in this case, it was $30. And then the next trade was a $120 trade. We can check this one here in the Excel sheet. It was the March of 14. We go here to the right, and then you can see here the trader lost was the 14th here. The trader lost $30 and then made $120. So that means like here, the trader lost $30 within this trade and then made $120 within this trade. That's just something what's very important with the money management. That means like the trader could lose 3 more times for the next trades and not lose money. That's something which is very important with the money management, right? And then only to trade, as you can see, your entry is here, stop placement is up here, while the red candle is closing. There's a timer on the right side. It says like counts down hours within 60 seconds. So you will see when there's really a red candle 2 seconds before or after the candle is closing. That's the time frame when we want to enter the trade, because most candles will stay in red. Like you will not have the problem anymore that much that there was a red candle and then it's going green. And then the trader was entering into the trade. Stop loss was here on the color switch. You see here multiple lower highs. You see a lot of red candles, right? And then as we said, also with the trading plan, until here it makes sense to trade. And this is exactly how the trader was trading. And then after that, when the trader wasn't trading anymore and was just analyzing how many more opportunities was the trader able to see to put in $30 to get $150 out. Later on, maybe for the second or third year, it's possible to do this with $1,000, $2,000 a trade. But first of all, it's important to stay safe, to learn properly. And then after that, the scaling comes. So here you can see at a second part, that's another day. That was a Friday on the 28th of March. And you can see here the square again in the first picture of 2 hours. We compare the last 2 hours. We see, oh, last 2 hours, the market was doing this move down here in length from here to here, right? I'm going to draw this one in from here to here. That means if the market would do around the same length, we would expect that the market has a hard time or just goes around to this first line. I would not expect too much that it goes down here, just like down here. It might be even that the market will have more struggles before going to this line here down here, what is just a bigger structure low. Because look, here we can see the market was pumping down very nice and aggressive. Here you can see the market has already weakness and does already multiple retracements within this length up. And they're getting bigger and bigger here. On the last one, it was way more bigger. That means we have some troubles here. That's not untradeable, but it's just like we will have a hard time here, right? So what actually happened is, and that's also what's very interesting, the market didn't made it here to this line within one shot, but made it around near to this low here. And what the trader did, and I hope you can use this for your own trading, is that you see here, the trader expected the market to go down. Like we saw that the market did this length from here to here, 1 time, 2 times, right? And then here did around the same length for a 3rd time. And then what happens very often is that the market does same lengths and retracements and then starts to make lower highs with green and red color switches here. That's why it's so important not to read your color switches first. It's like a frequency with the radio. We need to first cut out the noise by reading bigger structures, like the clocked, that means like the, let's just say the consolidations. And then when you see the consolidation is a bit moving down, like as you see here, right? Because it comes back within the same length at least. We don't read here any color switch. Then you see it's wiggling down, and then we start reading the color switches. And then you see here after the market did here multiple color switches down, the trader started here where this line is, entered to the trade, adjusted $30, and in this case we need to check here. This was the March of 28. We go here March 28. The trader here was within the first trade losing $30. The trader was letting the trade stop out. The main reason is because it's a consolidation phase, and it's very important not to place the stop lower or something. That's something what I will show you. I hope that's also a very important thing, because we would suffocate the trade. That's something what the trader was misclicking here. Also very important. And then here you can see T2. T2 here was a losing trade, $30 loss. And now it's something what's very important. You see here what the trader did. The trader didn't trade it just a lower high here for the T3. Because on the second trade, the trader just traded here because the market did the same length back, clocks down, like literally like shuffles down, and then does the T1. Very good. Then the market goes here by higher highs. Green and red goes higher. takes a lower green and a red candle, enters the trade with T2, and then gets stops out. And that's totally fine. I think that was a really good trade because the market does a specific length of retracement and then goes down, and then a bit of consolidation down here or something, and then continues to go down with using a lower high. I really love this approach. There's, by the way, something like an anchored VWAP with the orange line, also pretty nice. The third trade is very interesting because you can see here the trader didn't took any lower high anymore, just like green red and a lower green red. Now the trader was letting the market goes with multiple green and red, multiple lower highs, and letting a trend to go in. Like, this is something what's very important because we have then a lot of pressure. And then you see here the green and a red candle after the market was doing 1 time, 2 times, 3 times, 4 times, 5 times lower highs, multiple times. And then before the market reaches also this low, something what's very important, because here the market will struggle very often. The trader entered the trade, and the awesome thing about this was a $150 trade. And the interesting thing about this is that this is $150 and this is also $150, but this is better because the color switch was smaller, and we can use with future lots of leverage with the entry and stop placement that makes sense on the highs, right? That means if you see the market is going down like that, stop placements make sense up here. And if you would enter at any on these green points, what I'm just drawing in, like let's just say you sell here or there, if you move your stop to what is the black line, for example, you will lose money, like you will suffocate the trade. And that just happened with trade number 3. You can see here the trader entered, stop placement on the color switch highest point on the structure, and then the market was spiking here back but not touching this high because sellers were defending it, and then the market was really going down onto this low, and then the trader took profit and that's something what's really important, was too greedy and took more. If the trader is able to adjust $100 to get $500 out and just gets out of 10 trades 3 winning trades, that's already enough. I mean, we just need to do the math. Losing $100 7 times, for example, making 3 times $1,500 in average. Sometimes will be an $800 trade, sometimes a $300 trade. That's the practical side, because skill on winning more often comes over years. But that you have this risk-reward ratio, what I'm showing you here, this is something what can be accomplished in the beginning already, and that's a really big difference. Like, that means like a trader could literally trade with higher amounts without even having the skill, because it's the strategy literally and the pre-planning, what you see here with the first picture. Everything what happens after, if the market would go up or something or down, if you see that the market is going down and you trade like for 7 times a month for 1 or 2 hours, and you have 20 or 30 trading opportunities, as you see with this Excel sheet what I showed you, then that's what I mean. Like, there is no need to try to read like other market moves or whatever. I think it's more to concentrate on these type of trades, and then once that's profitable, double down on something that works, or then we can trade also the other things if you want to concentrate on that. Hope you could take something out of this. You can go to trade. If you're a business owner and you have 5 employees or more and you're making turnovers, go to tradewithjd.com. You can book there a meeting. We will meet up together, exactly do some exercises together. If you understand scaling and value your time, this strategy is designed for you. Check the link under this video, go to tradewithjd.com, see the results, and find out how you can apply this with 10 times to 30 times potential. You can book there a meeting also. We'll meet up online, do some exercises together, and I hope it serves you well. Wish you all love, good trades, JT out.